So, news trading. Now, I'm going to be covering a few topics. Now, not all news data releases should be traded, and what I'm referring to is really high impact news data. A lot of traders will sit around and try and trade every single, news data release on Forex Factory with a red folder and wonder why news doesn't necessarily go anywhere every time a high impact news release is basically released. Now, what you really need to be doing is understanding that every high impact data has a theme around it, or should have a theme behind it. And if it doesn't, then chances are the news data release will not really have an effect and the market won't really move. So I'm going to show you how to establish the themes around the news events, and obviously by understanding the current market themes, you can be best placed to choose the right and correct news data releases that will have the highest impact. I'm going to be covering buy the rumor, sell the fact, so how to know if news is priced in, and finally calculating deviation to trade the unexpected. So first things first, what we want to do is understand high impact data and establishing a theme around that high impact data. Now, not all high impact data displayed on a Forex aggregate news site like Forex Factory, for example, is really tradable news. What you need to establish is the theme. So when establishing a theme, you're looking at the bigger picture, right? Now, you could have an example of where a central bank is looking to raise interest rates, right? So that could be the theme. Will central banks raise interest rates? Now, what are the conditions under which the central bank will raise interest rates, right? So they're looking at obviously inflation, right? So what you then need to do is research and find out what the data on inflation is. Now, if inflation has been rising and is meeting the 2%, target, and has met the 2% target, and maybe exceeding the 2% target, then, and the central banks haven't raised interest rates, then you are probably looking at that being the main theme. And you'll find out as well, if you do some research on on Google and looking at Bloomberg or Reuters or Market Watch, you'll start to read the reports that will, these journalists will start to talk about the themes that are reoccurring, or they'll be reoccurring within certain financial publications, right? So there's no point in, I wouldn't say there's no point, but if the theme is about the interest rates, then I doubt that, for example, jobs and maybe something like manufacturing will have much of an impact. Although they are high impact news, normally they wouldn't necessarily have the potential impact that anything to do with inflation would. So focus on data that basically indicates potential rising inflation. So we'll be looking at trading high impact news like CPI, wage growth, average wage growth, manufacturing, PMI, and anything that indicates that prices are rising, right? Now, another theme would be something like, are we entering into a recession? So if we're focusing on anything to do with recession talk, obviously we're focusing on GDP. Now we need to focus on trading news data that indicates economic growth, so GDP growth rate, employment, etc. So establishing a theme comes by doing some general research on Google, finding out what's happening with the economy, looking at trading economics, seeing where the data is pointing, marrying that up to financial publications, and then understanding and trying to get ahead of the curve when it comes to or choosing what news to trade and what news to keep an eye on. I wouldn't necessarily say ignore, but just to just keep an eye on certain data. But if like I said, we're focusing on GDP growth, then CPI and wage growth isn't going to have much of an impact if the economy is going into a recession, right? So we need to understand the theme behind why we're trading the news. Now, buying the rumor and selling the fact. Is news priced in, and how to really determine if news is priced into the current market, right? Now, let's say there is an upcoming and potential high impact news event. We've already established the theme, and we are looking at Forex Factory, and we're seeing that there's a high impact news event. Let's say, for example, it might be CPI, and there is it's going to be in the next couple of days, and we're waiting for that event. Now, what's important is that we need to observe what price was doing leading up to the news event, because this is how we kind of can try to establish whether news is potentially priced in. So using the example of, let's say, it could be any event, but let's just say CPI, right? Now, if the data is expected to be positive and price has been making higher highs, chances are the market is pricing in the data release. So this being time and this being price. Now, let's say on this date, let's say, for example, here, we are, expecting the CPI release, right? And we're at this point in time. Now, if the market is moving higher, right, and into the release of the potential CPI, and that CPI data is expected to be positive, right? And you can read that via the forecasts on Forex Factory or tradingeconomics.com, right? It would tell you what economists are expecting the figure to be, whether a higher number, an increase or a decrease in the CPI figures and inflation, right? But if you have the market making higher highs, higher lows into the release date of the CPI, chances are a high probability that the market is already pricing in where they think the value of that particular currency will be, right, before the news is announced. And this is one of the reasons why a lot of traders get caught out on good news, because the money was really made from down here. They expected prices, right? So you're buying the rumor. The rumor started all the way around here, down here, right? All the way back here. Buy the rumor and sell the fact when everyone else is jumping in on news data. And that's not to say that prices can't go any higher, but we're trying to establish whether prices have been, and the news has been priced in before the actual event, right? And what that does is that kind of gives us an indication of how far potentially this news event could go into the future. And if it's been priced in, chances are that prices were not going to go too much higher then the price, if the data comes out as expected, right? So if it comes out as expected, let's say for example it was, it was expected to be 2% and it came out at 2%, then brilliant. Where you will get probably a bigger move to the upside is when there is an unexpected move, which I'll get into a bit later later on in the course, where let's say for example it's expected to be 2%, but they increase, the inflation ends up coming in at maybe 2.5%, or 3%. Then that's obviously unexpected and positively unexpected. So whereas they're pricing in at this price for a 2% raise, what the market hasn't factored in is a CPI rate of 3%, right? So if 3% will catch them off guard, then prices should move higher. But if the market, right, if the data is expected to be positive and price has been moving sideways or lower, chances are the market has not fully priced in the data release, and that's pretty obvious. If the market is just moving sideways or even lower, there is more scope to the upside. And what I mean by that is pretty much if it's expected to be positive, but the market is just really just going sideways, you have more of a chance of the news having a bigger impact once the news is announced on a certain date, right? Rather than obviously this example where the market is pricing in where it thinks CPI is going to be, right? And it's even better if the market is actually coming down, right? So buy the rumor, sell the fact, watch the market before the high impact news, and also before you even do that is establish the theme behind the market so you know what trades and what news events you should be looking at.